think I've been quite impressed because manufacturing has always been something that Britain doesn't automatically get associated with. But I think we're probably one of the top 6 manufacturers. And I think from a sentiment point of view, when we had the stats out last week where we were euphoria, we're out of recession, but it was only, everybody was laughing because it was only 0.1%. But actually this data this morning, I think actually is the first sign of a genuine recovery. So I think we should get a bit upbeat about it because also it's a sector that we're not associated with.
Yeah, it's good that we're out of recession, but at the end of the day, things are a lot weaker than people were talking about in August, September last year. And take the money numbers we've seen today. The trends are okay, but there's nothing suggesting we're bouncing back at the pace that people were talking about 6 months ago. So 2010 could well be a good year on the inventory side. I'm yet to see really solid signs of a strong recovery. So I'm concerned for the time being.
I think, we are very good at always talking the economy down. I think as an entrepreneur, I'm not an analyst, and I think half of the recession is about sentiment. And I think when we see, some positive vibes, let's kind of raise the momentum a bit and actually look at it as a positive sign and jump on the sentiment bandwagon rather than
That needs investment. That needs people to go out and spend some money, doesn't it?
That's why I invited me.
Yeah.
Yeah, let's move on and talk about one of the other stories that is topping the news today. British Airways' ambitions to tie up with American Airlines and Iberia have moved a step closer after the European Commission said it has started consulting with rival airlines. It's believed that BA, AA and Iberia have all made concessions to address potential anti-competitive implications of the deal. James, do you think there's any benefit to pooling 3 troubled airlines? I mean, do you think strategically you can wrangle some kind of decent business out of 3 ones that are struggling?
What are you saying? If you squeeze it hard enough, will you get any more?
Yeah.
I think the answer is you would actually, because the question is what choice do you have? Because the cost base, which is really the biggest challenge for these businesses, is just too big. And I think the concept of bringing 3 together, the message really is you're trying to get economies of scale, which is really, I think, the point they're making. And I do think that this is better than not doing anything. So I would say you're probably going to see more efficiency coming out of this move.
There is one thing, isn't there? I mean, about the efficiencies you get from general M&As. I mean, what is the answer? 50% of it? I mean, hostile M&As hardly deliver any value at all ever, do they? So I don't know about friendly ones.
Most of them tend to fail, I think, if you include a proper measure of costs.
So, do you do much M&A activity? Or if you do, how do you make it work?
I mean, that's the business I'm in. So M&A is my core day job. And I think providing you have a very clearly thought through integration plan where those efficiencies, will be derived, I agree with Alistair. Generally, it doesn't happen because 2 + 2 doesn't always equal 5.
James, I was in Davos last week and James and David Cameron was there. If anything, actually, he seemed to have softened slightly his stance on cuts. He said the important thing is to start. He didn't say we're going to start with big cuts. But he said we need to give confidence to businesses by announcing plans. Where do you actually stand on this?
Funny enough, I met him myself last week. We interviewed him for the Big Issue magazine, where I've just become chairman. And, I asked him his views on the whole issue of stimulating the economy. And I think one of the things that he said that I was quite encouraged by is he's also very focused on the SME sector, which is where I think the engine for the UK growth needs to come from. And we have 4.8 million SME businesses in this country. And I think all the leading parties, I think that is where they should be focusing, because as we saw this morning, people like Glaxo and all the large corporates are either shrinking in size, making cuts, reducing expenditure, cutting back on R&D, but actually the activity is in the SME space. And when you've got nearly 5 million businesses, you only need those businesses to hire 3 or 4 people, and actually you're going to see quite a good activity from the economy.
All right, let's get on to questions from the viewers then. Great show today, guys. Thank you very much. After seeing prediction by think tank today that house prices will rise 6% this year, I'd like to see what James and John now think of this prediction.
I think the papers were saying that over the next few years we're seeing house prices predicted to go 20%, which I think is probably the most bullish statement I've seen. Having said that, I think what's happened is so many of the house builders have stopped building, and I think there's a predicted shortage in houses coming onto the market. So I would say that the whole kind of housing piece at the moment, the sentiment seems to be coming back, which I think is a fantastic thing. Do I think it will happen? on the basis of supply and demand, because there will be a shortage, I believe that's a fairly good prediction.
Okay, another question in from Mark. John, with US GDP picking up on that really, with US GDP exceeding expectations, PMI data around the world exceeding expectations, why isn't the market doing better?
I think there's a thought that maybe there are some sparks being cast in terms of attempting to get a fire going, but it's actually falling on relatively damp tinder. And by that I mean what we're seeing is a catch-up and a restocking of the shelves. Inventories being rebuilt is a one-shot deal, as is government stimulus. So I think people are quite worried that when you get into the second half of this year, not only do comparisons start to become more difficult, but actually the burdens that consumers have to bear become heavier. And therefore I think there is some scepticism that the momentum that we're currently seeing in the economy has any real follow-through potential.
Can I just say, but how much of that was already built into the price? Because if you look at the way the markets have performed over the last 3 to 6 months, and we've seen such phenomenal growth, but actually without a lot of substantial data. Now the data's coming in. I'm almost asking myself the question, how much of it was actually already pre-built in to the current euphoria in the market?
I think it's difficult to judge, but I think you're right to say that the market attempts to look ahead. They often get it wrong. They have discounted
but this time
many
they
more.
may
many
just
more.
got it right.
They may, absolutely right. So I think the issue is if you believe that we are quite close to the peak in corporate earnings, i.e. a secondary peak, then I think markets look fully valued.
The 14th African Union Summit has opened in Addis Ababa, Ethiopia. Speaking at the opening ceremony, the chair of the Africa Union Commission condemned the engagement of African countries in wars and conflicts, saying that they held back growth on the continent. For more, we're joined by Ayo Salami, CIO at Duet Africa Index Fund. There's been, for decades, lots of talk about the vast potential of the African continent for investors. We're hearing these comments about the impact that wars and conflicts are having there. Is it still the case, as much as there ever has been, that conflict is a big drawback for investors?
There are some parts of the continent where you have ongoing low-intensity conflict, primarily Sudan being the one that most people know about.
How can investors best make the most of where you see vast growth like Botswana, as you say, without submitting themselves to the risk that's associated with some of the other more difficult parts of the African investment?
It's simply a question of research. It's research and information that delineates one country from another. Again, when you look at GDP numbers, when you look at budget deficit numbers, when you look at economic growth numbers, you find that of the 20 fastest economies growing in the world, 20 fastest growing economies in the world today, 12 are in Africa. But investors, this is something that people don't know about.
But Ayo, I think the problem investors have, people like me, I think there's a fear that corporate governance in that region is probably the one thing that holds us back, because legislation, the legal system, transparency, governance, I'm fully aware of the Africa story and I'm a big fan, and I think China is going to become the biggest winner in this because they've taken a risk, they've got the liquidity right now. But individual investors like me, whenever we've looked at that, and I've been aware of Botswana and very excited by it, but when you open the lid, some of the issues and the challenges for investors from governance and transparency is scary.
It's not. I think it's again an issue of perception. If you looked at a lot of the companies which are listed on the stock markets in Africa, they tend to be subsidiaries of European multinationals. So it will be Nestle, Guinness, Barclays Bank. So if we have problems with corporate governance there, I think that would just, it's not that I would not instinctively call that an African issue. But when you again look at the basics of jurisprudence in a lot of African countries, it's either going to be based on French Napoleonic law or it's going to be based on English law. So what you have always had in the past is that when these countries were not democratic, the courts, although they were independent, the executive failed to implement the decisions of the court. What you should look at is property rights, and you find that in a lot of African countries it's actually perfectly easy and perfectly feasible. It might be a bit litigious, but it's perfectly possible to enforce.
No, I agree with you. The problem is not that the framework of the legal system, it is the enforceability of that system. You can have whatever laws you want, but if you can't enforce them, then what is the value of the system?